Silver prices witnessed a 6% drop in 6 months after touching record highs. This was a major decline amid easing of fears over US credit risk and the US-China trade tensions. Will the prices continue to drop from here on? My colleague Aditya Rai spoke to Ajay Kedia, director at Kedia Advisory. Aditya Rao, over to you.
We'd like to understand that how are you looking at the gold prices on Dhanteras, and is it going to fill more excitement among the customers, the drop right now?
Season greeting to you, Aditya, and to all the viewers. Happy Dhanteras and happy Diwali. And this is a great day because yesterday we have seen almost 4.5% fall in gold prices, whereas silver prices tanked down by almost 7%, closed. We can say on domestic market, we have seen an all-time high of 1,70,000 for silver, 1,32,000 for gold. I think this is the first this type of fall in last 8 weeks. Still, the fundamentals are very bullish for bullion, as we know. Donald Trump, tariff concern, relation with the US and China, relation with US and Russia is still on a very fragile note. So maybe this type of volatility would be there, but yes, I think this is just a sign that whatever the factors up till now was supporting bullion is now started exhausting. So slightly be cautious, but long-term scenario definitely goes up for bullion. But time being, after a greater rally, what we have seen more than 80% gain from Diwali to Diwali in case of silver, around 74% for gold. So I think some kind of profit booking is expected.
Okay, so Mr. Kedia, we would also like to understand that when we are saying that some kind of profit booking is expected, and amid this entire global phenomena which is going on right now, amid the various nations, are these prices sustainable at the record high levels, or we may see some kind of a volatility in the bullion prices?
See, volatility would be the part, because up till now in last 40-50 years, we have seen either there will be a one or maximum two reason where bullion get positive. Take example of 1990 where oil fight was there. That was the only reason. In 2008, global financial crisis was the reason. In 2020, we were having a pandemic, one reason. But currently, we have geopolitical tension, we have de-dollarization, we have ETF buying, we have central bank buying. So all this factor has contributed this volatility, and volatility is extreme. We have never seen in last 40-50 years this type of volatility. So I think volatility would be there, but yes, correction is due. Because whatever the factor up till now we have been talking are on the verge of exhaustion. Like let's say next week Russia-Ukraine war have a pause because of intervene what Donald Trump is trying to do. Or let's say US and China tariff concern has cooled off. So I think that could be triggering some profit booking, and maybe we can see around 10-12% correction, because yesterday only we have seen a 7% correction in silver. So I am slightly cautious at this moment. Maybe after this rally, some sign of weakness or consolidation. Generally, bullions go in a time correction. So I think some type of time correction or little bit correction is due from current level.
Slightly and rightly cautious right now, but do you think that the de-dollarization is going to impact the prices further?
See, already the effect has been, we have already seen from last 3-4 years. It is not a de-dollarization term is evolved in last 2 months. It has almost 5-6 years. It has been continuously there. Like India is now trading with Russia on a Vostro account, trading with Iran without dollar in picture. So I think things have been totally changed, and the trust US was having previously has been totally changed now. So I think de-dollarization will continue, and central bank buying continue to be there. But let's hope, because 2 years, 5 years back, the prices was around, let's say, 1800, 1900 level mark. Today, it's around 43. The risk has been involved. But important would be the silver, because 5 years, 8 years back, there was no commercial use, or we can say industrial use for silver. Hardly we use for a utensil or gifting purpose, but in last 5 years we have seen clean energy is a new trend coming up, and because of that the consumption, industrial consumption in fact is been continuously rising, and last 5 years the supply has been totally stagnant, and that is why there is a humongous shortage in silver. Let it be London, let it be US, Australia, and even in India, we have seen prices move to the level of 2 lakh. So I think silver might perform very well in next couple of years. Maybe we can see level like $72 to $75 mark, which means 2,50,000 plus on domestic side. But currently from here, a corrective deep or a consolidation is required to continue this type of rally furthermore.
How much of it do you look at it as a tactical retreat? Because the silver prices and the gold prices have come off suddenly. So could it also be a tactical move?
Yeah, it will, because take example of silver again. In 1980, prices went to the high of $50 when Hunt Brothers cornered silver. In 2011, also we have seen prices move to the level of 50 and crash down to the level of $17 in 2011. We have already seen this type of movement has already been observed in past, but this time the things are being totally changed because central banks are buying silver, or we can say industrial use are being there. So maybe volatility can be there. We can see a fall around, let's say, 18%, 20%, but that needs some time to adjust this type of rally what we have seen. So I think we are not expecting a crash-like situation, but a time correction with a correction in gold maybe around 10-12%, and silver is slightly more volatile, or in Hindi we used to say chanchal. So silver is more volatile, maybe tuned to the 15 to 18% is expected, whereby we can review the situation and we can add on. But frankly, I'm more bullish on silver. Take a case of gold silver ratio, which is currently around 80, to suggest that there are more potential for silver in coming period.